6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco. Good morning to you there, and 10:30 p.m. at night in Mumbai. Greetings, good morning, good afternoon, and good evening, wherever you are in the world. My name is Patrick L. Young. The IPO-VID live stream, Series 5, Episode 3. It's number 27, ladies and gentlemen, starts here. America apparently won't label China a currency manipulator, but it certainly is a tough antitrust buster that's coming out of Shanghai. Ant Group has become a financial holding company after its IPO was, of course, incredibly halted recently at somewhere past the 11th hour. That involves oversight for the new Ant Group from the central bank in China, while the Ant parent, Alibaba, has received a fine which is surely beyond even the standard epithet of swinging. A record $2.8 billion fine, and the stock promptly surged as investors had clearly feared an even worse penalty for Jack Ma's empire. Ant and Alibaba lives for another day, and therefore, thank the Lord, we'll all be able to get our AliExpress deliveries in the near future across the world, presuming, of course, that the Suez Canal stays open. Presumably, for Ant Financial, a SPAC deal is off, but will we see another Ant Financial IPO soon? Over in the USA, with yields on 30-year Treasury bonds stubbornly above 2.3%, things feel almost giddy in the world of conventional finance as we await a spotting of the great yield curve sometime during the course of this decade, albeit as we sit on the cusp of the Coinbase IPO. More on the tail of last month's multi-million-dollar CFTC naughty boy turned this month's apparent stock market darling later. Bitcoin is, of course, in the stratosphere again. We find ourselves considering this week's exciting development. NFTs have definitely reached the establishment when, as of now, they become a trinket you too can receive for listing your stock. Yes, indeed, 6 recent New York Stock Exchange initial public offerings have been commemorated with their very own unique NFTs, making a handy digital memento of listing. Where once you dipped your baby's shoes in guilt, or way back when the photographic processes involved lots of chemicals, you were fascinated by the whole photographic process, which of course has now given way to the Sprague selfie on your mobile phone. Now, that commemorative event of your listing comes with its very own NFT on the Ethereum blockchain. You can view the New York Stock Exchange's NFTs at nicey.com or crypto.com. As marketing stardust sprinkling goes, Nicey are to be applauded. What an excellent idea. All this and more has been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse business. Send us an email or hit us up on any of the social media wherever you're watching this show this evening. Call me, contact me, Patrick L. Young, and we will be delighted to sign you up for a 30-day trial so you can better understand the daily machinations of the exchange business from our perspective as the Bourse business's international water cooler. Our guest today and today's topic is distributing blockchain globally. And well, our guest is bringing with her her very own sprinkling of international stardust to the studio. Welcome to Sandra Ro. Sandra Ro is CEO of the Global Blockchain Business Council and a director of Global Digital Finance, having been an early investor in crypto assets. Formerly with CME Group, where our paths originally crossed, Sandra was the head of their FX and metals research and product development, amongst other functions, which included architecting the CME CF Bitcoin pricing indices, leading to, of course, Bitcoin Futures. Sandra was a founding member of the Linux Foundation, Hyperledger Enterprise Ethereum Alliance, and post-trade Distributed Ledger Group. Crazy name, crazy guys. Amongst many other wondrous digital achievements in what seems to be an incredible career so far, because I can't actually believe that she's old enough to achieve half of these things. Quite incredible altogether. Sandra, it's a pleasure to have you. For those of you who see a bilateral discussion on this IPO-VID, I firmly believe it's clear that Sandra has deep decentralization running through her bloodstream. Sandra, welcome to Distributing Blockchain Globally as the topic of today's theme. Tell us, where are you distributed today?
Hello, Patrick, and thank you so much for inviting me onto your show. And I'm so delighted to spend some time with you. It's been too long. I'm sitting here in New York City. I don't know if you can tell some of the skyscrapers in the back behind me, but glad to be here.
That's fabulous. And so you're in New York City. That's wonderful. I think things are gradually getting to normal in the areas around New York, which is wonderful to see. Tell us a little bit about your journey. I mean, you've lived in the US and you've been, well, traveling all around the world.
Yeah, absolutely. I mean, I grew up on the East Coast, but I really had wanderlust very early in life. I actually ended up spending over a decade in London, the UK. I'm a UK citizen. And I went to business school at the London Business School in the UK. So most of my career is really in London. And then I came back to New York a couple years ago to enlarge an understanding of my blockchain distributed ledger ecosystem in the US. I actually had more contacts in Europe than in the US, which people don't obviously see sometimes because I have an American accent.
Well, it's interesting to see. Yes, you've made that transatlantic move. How would you compare and contrast the differences between the blockchain business on the East Coast and in the USA with, say, London and Europe?
Yeah, no, the similarity one is that they do share is a focus on fintech and financial services. Also, because let's face it, London and New York are financial centers. So a lot of the innovation happens to be around financial services. In New York, also, I'm beginning to see some of the ancillary industries being picked up, including healthcare and energy and digital identity, government services beyond beyond fintech or financial services. The one thing I love about London, you go to London, and I have to say the ecosystem is all right there: government, regulators, investors, and the entrepreneurs.
That's really good to hear. I mean, very, very heartening altogether for our many viewers in the City of London. Indeed, Sheriff of the City of London, Professor Michael Manelli, who was our guest just the other week. Now, looking at that whole world, ladies and gentlemen, wherever you are this evening, if you've got a question for Sandra, drop it by in the chat box wherever you're looking. Also, please send us a little love. We would absolutely appreciate that because it helps put us up. The artificial intelligence, the search engines, and all of those curious things that pointy-headed mathematicians can manage to understand. And we have our first message this evening. So delightful to hear from you too, Christopher Messina over there in Florida. I see he is too. Glad to see you on the show. And of course, Chris Messina was our very, very first guest 26 shows ago. How incredible. Sandra, tell me a little bit about the Global Blockchain Business Council and how you came to be there.
So the GBBC, I take no credit for this, got founded by a group of entrepreneurs during Sir Richard Branson's Necker Island Blockchain Summit in 2016. And the Swiss nonprofit was founded on the basis of education and advocacy for those who don't get blockchain and crypto. The mission continues today. We started off with a handful of institutional members. Now we have over 250 institutional members around the world across 76 jurisdictions and disciplines, and 130 ambassadors who help us as trusted leaders on the ground.
That's an incredible number altogether. So 130 ambassadors around the world, and that's representing 76 countries or more?
Jurisdictions, we're careful about the word country because, you know, sometimes certain countries cannot be referred to as country or get us in hot water. But yes, we're ever expanding. We just announced that in January of 2021. And every year we're growing. And I have to say, we are in boom time. It was a difficult 2020, but we made through it. And 2021 is just, you know, to the moon, as they say.
So to infinity and beyond, as Buzz Lightyear would have said about his own Bitcoin holdings, as I think I mused the other week. Interesting. So therefore, 2021's got off to a great start. We've obviously got this amazing crypto boom happening around us, a lot more people talking about us. Before we get to that, tell me a little bit about what you're seeing at the moment in the sort of trends that are coming to you in terms of the blockchain business as a whole.
Yeah. So we focus squarely on growing the pie. This is a multi-trillion-dollar industry in the making. It's not just crypto. It's not just digital assets. There's actually entire ecosystems that are being built today across multiple industries. I don't think there's a single industry that will not be affected over time. And so when we look at those trends at a macro level, the thing that we're seeing top of book is education at the government, regulator, legislator level, but also some of the executives of some of the biggest companies around the world also trying to unpack what do we do with our legacy business in a world where technology is permeating many aspects of industry, whether it's supply chain, transparency, data movement, data and money. There are many different angles.
Fascinating angles from start to finish, and also I see it's great to see we're getting some comments coming through this evening. Wonderful there. We've got a LinkedIn user saying to us, fantastic to see a great role model for women on IT. I couldn't agree more. That's a very, very reasonable thing to be saying, and therefore demonstrates that this isn't just all about blokes, because I think that's one of the biggest problems we get when we come to so many technological disciplines, and the women on IT movement will be delighted to hear that. So Sandra, you're seeing huge growth across the board. You're seeing all sorts of things going on. Obviously, that brings us very elegantly in real time to a question we've just had from Chris Pryor-Williard. Good evening, Christopher. It's lovely to see you this evening once again. Thank you for joining into us. So Chris has gone in, he's gone straight for the money shot, actually, Sandra. Blockchain feels like the dot-com revolution. Much talk, but the mainstream has not yet signed up. Dot-com heralded in a change of culture. What culture change is likely to come from blockchain?
I will argue with you that we've seen a huge shift in the last 6 months alone on mainstream adoption. And just giving one obvious case, the headlines coming out of the US, PayPal has offered cryptocurrency access to its 325 million active users, as well as 29 million merchants. That's a game changer right there in terms of mainstream adoption. And we're seeing the convergence of people being able to hold digitally. And we're using the term digital wallet right now, and I'm very careful about that because I think it's going to evolve. But your ability to hold not only fiat currency, but cryptocurrency, and then down the road, other digital assets, which haven't even been invented yet today. And that notion of digital wallet then also merges with digital identity, which is going to take on another context. So when you talk about culture and what culture changes will happen, I think it will depend on the industry. I think it will depend on the use case. But what we're beginning to see as a consumer, the average person on the street, is more options and more access. And frankly, at some level, this is also about self-sovereign power over your data. And we're going to see more iterations of this.
That's fascinating altogether, and certainly we had a great conversation about digital identity just last week, indeed, with Colin Howard, who's an expert in the field in the UK. But I think it is interesting talking about this. You're saying, yes, you're seeing the seismic change, and in some way, possibly COVID has managed to help this along. The PayPal point, really, really an interesting one, certainly to bring that to their amazing user base. And therefore, we see also the original dot-com era payments revolutionary coming full circle and offering something beyond fiat currency. But do you see some parallels with the dot-com boom, and indeed, one must say, dot-com bubble of the course of 20 years ago?
So many people refer to this next paradigm shift as Web 3.0. How do we build next generation internet in a better way? I think the view today, and some people may not share this, but I think the view today is that the internet was brought about as a utility and everyone has access to it. It's a wonderful public good, but now data is controlled by a handful of companies around the world. And we are, as consumers, in many ways powerless to that sort of control over our data. In the next generation, the blockchain generation, the view is a decentralized, distributed network of data that controlled by grassroots, meaning the people, is a different paradigm shift that allows for more control at the person level and therefore is a better distributed model for the future. Now, the business models that come off the back of that, people are experimenting right now with 360-degree circular economy, meaning I actively choose to participate in a network. I get paid for that because I either create data or I'm participating in the data generation. These are all novel concepts, and I think it's TBD on how these evolve.
I think that's really interesting. I mean, you're discussing the whole way that the world moves on in a complete paradigm shift. And again, we had a conversation with some of this last week with Colin Howard and the many multifaceted things that are going on in the blockchain world. Well, that actually brings me to an interesting aside. We have another question from Christopher Messina. He's out there in Florida today. Christopher asks, how much marketing attractiveness do you attribute to using the term blockchain? Would anybody care if an entrepreneur said, I want to build a business based on a distributed database? Who's with me?
I hear you. Look, the messaging across the blockchain industry has been, a lot of hype. And I think when we really get down to the nuts and bolts, the question that really should be answered is, what is the problem you're solving for? Whether it's a big societal problem or whether it's a process problem you just want to find a solution to as a business. And frankly, do you need a distributed system or not? And I think there's a lot of other questions that go after that. But I agree, it shouldn't be blockchain led. It should be about what problems are you solving for? And do the benefits of blockchain technology actually enable you to do that plus more? And I think that's sort of the change in messaging and dialogue we need to have.
That's fascinating. Thank you very much for those answers. Thank you very much, Chris. Thank you very much also to Chris. So we've had Chris Pryor-Williard and Chris Messina asking questions so far today. They're both subscribers, I'm sure they won't mind me saying so, to Exchange Invest Daily, ladies and gentlemen. So therefore, if you'd like to know more about the business of bourses, market structure, and indeed all sorts of other things happening around the world, come and join us. We'll be delighted to sign you up. Now, Chris Pryor-Williard has added a follow-up question, really interesting altogether here, ladies and gentlemen. And we've got a great pipeline of questions. If you'd like to ask your own question or make a comment, please interject, because I see, gosh, Colin Howard's going to be coming up in a moment too. So let's move to that question from Chris Pryor. Actually, okay, we'll go Colin Howard. Thank you very much, production team. You're on flying form tonight. Go to Colin Howard for a moment. So that's Bravo, another case for personal data ownership and a contributing technology. That's coming straight in from Colin Howard, who was our guest last week, talking about precisely a lot of these data topics from the leafy suburbs of the UK, not far away from someone else who's going to be coming up in just a moment. Let's go to Chris Pryor-Williard. So Chris Pryor-Williard's asked this question. Well, the statement actually he's made, the cop-out is the incumbents have to lose territory in the digital value chain to allow digital efficiency to be adopted. They're not going to give up the easy billions of dollars they enjoy making willingly.
That is assuming that the pie is fixed. And I think I would like to propose that the pie is actually growing and incumbents can actually enjoy even more growth and more billions if they actually think about how they pivot in a world where you have to collaborate. This is a collaborative technology. It's not build it and you will come or they will come. It's really, how do I work with others to enable the collaborative nature of this technology? And frankly, I think some large companies are beginning to see pathways for revenue generation, and some are shifting. It's going to take some time. Let's face it, the larger your organization, the harder it is to navigate. And there probably will be some losers in the end who don't move fast enough. It's almost always the case when there's disruptive technologies. But I think to assume that the pie is fixed, I would challenge that. And because I think there are new jobs, new roles, new opportunities being created that didn't exist 10 years ago. And that continues to happen today.
Well, of course, for those of us who are enjoying this wonderful discussion via the concept of the live stream, I mean, there was no such thing as a professional YouTuber basically 10 years ago. So I can certainly see where you're growing the pie. But I think to be fair to Chris, if Chris was actually conducting the conversation rather than just having to type things in on his direct interface, he's not the sort of person who's going to try and slow you down. He's a revolutionary like the rest of us, very much a capital market revolutionary. But I suppose his worry is that incumbents have a great ability to throw barriers in front of you and make things really difficult. And that's obviously a problem when you're trying to grow the pie.
Yes, absolutely. And we've already had examples of this. But it doesn't deter, and I'm going to give a cryptocurrency example, but for years, every business in the cryptocurrency markets have had issues with opening up just a regular bank account just to operate. They've been shut out. They've been bank accounts get closed, no reason, just lots of obstacles, which is why today you're beginning to see the rise of crypto native banks. And in the US in particular, you're seeing banks getting licenses of various kinds, whether it's a bank trust license or whether it's some derivative of, but there are now going to be banks that will service the crypto markets. The same thing is happening right now with insurance. We're seeing a lot of the incumbent insurance companies not interested in providing insurance on crypto assets. Well, guess what? They're going to miss out on that. And there will be eventually crypto carriers that are created and innovations in the insurance market that may or may not involve the incumbents.
I think that's fascinating. I think it's really, really interesting points. And actually, I'd like to get back to the insurance thing a little bit later. Also, I have to say, I speak from my own experience. Exchange Invest actually had a bank account closed because we got paid by a regulated crypto exchange in fiat money. So they said, you must be dealing in cryptocurrency, so we're closing your bank account. The paranoia of banks is quite incredible, and I agree. I mean, the sooner we can manage to get those wrinkles out, it's going to be great. Okay, we've got a load of questions, ladies and gentlemen. We're going to move to David Feltes, someone who is well known to both of us, I do believe, a former colleague of yours at CME, of course, Sandra.
Hello, Dave. Hello.
Great to see you both, says David. Great to see you too, David. Is the renminbi the real deal? And is it a threat to US dollar hegemony? Also, will we see more central bank digital currencies? Sandra.
So I will say at the GBBC, we're working very closely with the groups that are enabling BSN, which is the blockchain service network onshore in China, which will obviously be used to run the rails of the e-renminbi. I think the latest count is what, $300 million have gone through in their pilots, perhaps a bit more than that. It's fairly significant. I think the government's been very clear. Blockchain and blockchain and e-renminbi are a priority. I want to be very careful about the crypto asset piece. And it's a national strategy. It's part of the national strategy. So yes, it is real. What it does and how it proliferates, I think TBD.
TBD. Well, we're all going to look to the future, and that's going to be an interesting topic, I'm sure, when you come back in a year or so, because clearly we've got so many questions being asked. Ladies, have you got a question at the moment? Because I noticed that it seems to be mostly men, apart from one female, I do believe, LinkedIn user earlier. Martin Watkins joins us via LinkedIn. Hi, Sandra. Do you think the ownership of data will stay with the exchanges or the financial intermediaries indeed, or transition to the participants, individuals in a digital asset world?
That's a great question. I would like data ownership and access and control to shift to the individual layer below. So meaning either individual institutions or individual people. We need to move to that state. Otherwise, it would be very difficult to create that 360-degree economy I was talking about, where you can offer to lend that data, but if you don't have control over it, how can you monetize it? How is you as an individual or as an institution monetizing it? And frankly, we're just seeing a very dislocated, unfair system at the moment where a handful of very large companies control most of the data. I think people are fed up. I don't know about you guys, but I think a lot of people would like control over their own data. And then frankly, if it's relevant, to monetize it. And other people will just choose to be private.
Believe me, last week, Sandra, we had an upswell of parish anger across the exchange business and many more listening to Colin Howard as he was giving us a manifesto for data ownership. So I think it's absolutely true that people are looking to own their data in a much more meaningful fashion. And Christopher Messina, I see he's been happily trolling David Feltes, referring to the Weimar dollar. I don't think that's the Chinese renminbi that he's talking about, or the e-renminbi. I suspect that could be the currency that tends to be overprinted in Washington, DC, thanks to QE these days, but I stand corrected if it's not wrong. First question, for a while actually, since we've seen Jeff Cutler at the Global Association of Risk Professionals. Jeff, it's a pleasure to have you here this evening. Thank you for your question. Sandra, how much work is being done or needs to be done in the blockchain world on privacy, security, and digital identity?
So firstly, I think there are a number of different subtopics under that question, but from a digital identity standpoint, there are a number of projects that are going on around the world, whether it's incubated at the Linux Foundation Hyperledger or ID 2020, or many of these are consortia of groups of other people as well. One of the ones that I find fascinating, though, because we are living in a COVID world, is the acceleration of the digital identity standardization and harmonization around the world, because people want to travel. So with CETA and some of the airlines, they're working on a vaccine passport, including identity. How do you very quickly get into the airport, get your credentials, get verified, and then move on through? And how do you do this at a global level? It requires an incredible amount of coordination. Whether it has a blockchain component or not, in my mind, doesn't really matter. We need to solve for actually, how do we standardize a global network that will allow people to go back to traveling in a safe manner? And if you believe that the pandemic is something that we just have to live with for a very long time, then we need to find a global solution. Now, I think there are benefits to using a blockchain-based distributed network, but having said that, I think what's more important is groups coming together, including the WHO and airlines and all the relevant agencies, and coming up with a construct that works.
We're talking distributing blockchain globally with Sandra Ro. She's the Chief Executive of the Global Blockchain Business Council. My name is Patrick L. Young. I'm the publisher of Exchange Invest, the daily bulletin of the exchange newsletter that is, well, essentially the water cooler for everybody who's in the world of financial market infrastructure. Whether you're DeFi, whether you're centralized, however you're looking at it, please come along and subscribe. We will be glad to inform you about what's going on in the exchange world. Sandra, we've got just a number of questions coming through. Thank you very much, Jeff Cutler. That was a super question altogether. Good article, by the way, on the revolving door of regulators just this week on the GARP website. Congratulations. Christopher Messina is asking, whoa, a very specific question. Have you seen the tri-party repo service offered by Digital Gamma?
No, and if you want to send me some info, send me a LinkedIn post. I'd love that, or a message.
There you go, Chris. There's your opening. Go right ahead. It's absolutely fascinating, actually, I've got to say, Sandra. You'll enjoy that when you see it. Igor Telyatnikov, excuse me, I'll start that again. Igor Telyatnikov is asking, hi Sandra, what do you believe is the most successful live implementation of blockchain technology?
So Igor, I will take a few minutes and just say he was one of the first blockchain people I've ever met back in, I don't know, Igor, was it 2014, 15? It was a long time ago in London at a Bitcoin conference. And just full disclosure, I'm an advisor to Alpha Point as well. And Igor has navigated Alpha Point to where it is today, one of the most oldest and venerable platforms, and offering all kinds of amazing solutions for the crypto industry. Okay, to answer Igor's question, what do I think is the most successful live implementation of blockchain technology? This is going to probably upset a lot of the people who are on the enterprise side. I actually think when you look at the public blockchains out there, Ethereum, Bitcoin, Filecoin, there are many in the works. They're doing pretty amazing work. And frankly, the grassroots movement of a lot of these blockchains is something to admire. And there's still a lot of them are work in progress, but how often do you get tens of thousands of developers working together on a public chain to make it better and better every day? It's pretty amazing.
Question, Igor Telyatnikov. And indeed, Igor, well done, actually, because your work with Alpha Point, I totally agree, has been quite revolutionary in terms of delivering infrastructure that has really fundamentally moved all kinds of blockchain related, I don't want to say crypto, but all kinds of blockchain related distributed ledger style markets forward, which is quite important because some people see everything as being just crypto, and you've been doing a lot more than that. Back to another question. Good grief, it's all questions this evening. That's absolutely wonderful, ladies and gentlemen. Thank you for engaging. Chris Pryor-Williard once more. In post-trade, some inefficiencies are written into law in the name of safety of markets. The industry leadership is not incentivized to change this. What solutions do you suggest to grow the pie, Sandra?
So I want to bring up a debate that I've been having with a lot of market infrastructure folks, and then separately with people offering digital DLT solutions. Do we need T+0? And where do we need T+0? It's actually not a technical question. It's a question of, does the industry want it? Do the clients want it? Do the market infrastructure want to implement it? And I think actually it's throwing up some interesting points, which, frankly, from a settlement perspective, it's doable to do T+0, but for certain asset classes, does it make sense? And so when we look at whether we're going to have inefficiencies built in on purpose, there might be good reason for that. And then in other cases, maybe not. It's incumbents just not wanting to upgrade or change. And I think so it's a little bit more complicated than just everything should go to T+0, because I would make the argument as a former practitioner in the market infrastructure space that there are certain asset classes that probably should not go T+0. We need the time to settle. We need markets to not be 24/7 because we need to upgrade systems and they need to be down for a while.
I think that's a very good answer. And I think it's one thing that a lot of people will see as being very mature, because certainly there's a rush to sort of T+0 and people really don't think about the ramifications of what's going on, although it could be wonderfully good for certain aspects of payments and other things. And I mean, indeed, talking about payments, thank you very much again, Chris Pryor-Williard, for that great intervention. Lovely to hear from you. Back to I do believe this is the politics of the US Central Bank, Christopher Messina, noting that he passed Fed up in 1999. That brings us to one other comment in the stream at the moment. Colin Howard, who has been talking to us about digital privacy, of course, just last week. You can catch all of these back issues, incidentally, on YouTube, youtube.com, search for IPO-VID. You'll be able to watch all of these shows. Who knows, you may even be watching this show in the future in order to manage to garner Sandra's insights. If so, welcome from the past. It's a pleasure having you joining us here. Please remember to like the video before you leave. Now, Colin Howard, he's mentioning the fact that it's all about personal certification, and that requires assurance, which, echoing what you've just been saying, Sandra, dictates blockchain. Great stream of questions and comments, ladies and gentlemen. Send us anything that you would like to ask or say about Sandra, about blockchain. We're going to be here for the course of the next half hour. One thing which I just have to sashay onto for a minute is, I'm sure it hasn't passed you by, but tomorrow we've got a very exciting event. I mean, a direct public offering, something that has grown up actually over the course of the last year during lockdown, going alongside the initial public offering. They both amount to the same thing in terms of the stock is ultimately going to be listed. And we're seeing this incredible impact of Coinbase. So, I mean, tell me a little bit, what do you see as being the impact of this Coinbase suddenly becoming public in such a spectacular way?
Couple different things. I think, the Coinbase IPO has been known and long time coming. I think what has really blown people away is obviously their first quarter earnings numbers, which were made public in their filing. And also out the gate, their market cap will be larger than most exchanges, if I've got that correct. So if you're larger than Hong Kong Exchange or CME, what does that mean? And do we have a new set of rules? Or not rules, but do we have a paradigm shift happening now where a Coinbase of the world or the next gen crypto platform or blockchain platform will be larger than a JP Morgan or a Citibank? And I think these are questions that people are going to be asking. Are we seeing a paradigm shift here?
It's fascinating altogether, isn't it? In fact, our team at Exchange Invest, the production room, have just done this very interesting. It is looking forward 24 hours. And if as we currently believe, Coinbase is going to debut somewhere around about the last private market trades on the NASDAQ private market, which were amounting to somewhere in the region of $90 or $91 billion. That's what we're going to be looking at in terms of the world of exchanges. Coinbase in red is going to be something like $91 billion, which is going to leave it not just the most valuable exchange business in the world, it's going to be getting on for $20 billion bigger. I mean, certainly $16 billion bigger than the next largest property, the Hong Kong Exchanges, 0388 as its ticker symbol is in Hong Kong. And of course, the Chicago Mercantile Exchange, which is just fractionally behind the Hong Kong Exchanges as we talk to you today, let alone that great, incredible institutional success story, Intercontinental Exchange, who are, by the way, minority investors. We're not quite sure how much, but whatever they invested, I think the value of the business at the time they invested was about $400 million. So they stand to make a pretty picture out of tomorrow in terms of profits overall. And of course, then the London Stock Exchange, the Icarus Bourse, which so spectacularly rejoined the top of the pyramid, tier one. And I mean, if we look at that as a pyramid in terms of Young's pyramid of exchanges, which is how I like to represent the world of exchanges, then you can see Coinbase out top, Hong Kong Exchange, CME and ICE, they're all reasonably tightly grouped, but they're going to be some way behind this new digital upstart with, as I mentioned, the London Stock Exchange falling away somewhat in the background. So yes, Sandra, it's absolutely incredible in terms of what we're seeing here. But let me ask you a question. I'm not asking you to go full-fledged stock analysts on me. Do you really think that this is a sustainable value, or does this not look a little bit like a dot-com bubble fluff kind of thing, seeing so much value within Coinbase?
So some of the commentary that has been out, and I'm certainly not a stock analyst, but the question is Coinbase tied to the rise of Bitcoin? And we know now the Bitcoin price is at an all-time high again. That a lot of people are asking, because if you look at the earnings numbers, a lot of the other businesses that they've got are actually kind of flat in terms of growth. And that's one or two things that people have pointed out, which is number one, the minute you go public, you now have public shareholders, and you will be held to a scrutiny and accountability that, is a huge responsibility. So I think there are going to be more eyes on this group. And then frankly, what will the regulators do? Because if you look at the way the other groups are regulated, Coinbase, yes, has some licenses and is compliant, but will there be an additional regulatory scrutiny over the business? And what other businesses are they going into?
Yeah, it's certainly very interesting because, I mean, if I was about to suddenly have a $91 billion market capitalization, it would give you an incredible opportunity to potentially acquire lots of other businesses. And I mean, they have been acquisitive in the past. They've done 10, 12, 14 deals, something like that, with minority investments and the odd full-on purchase. I must admit, I mean, I will say this, you could not possibly comment, I'm sure, but I'm a little bit concerned about a business which is essentially charging roughly 46 times what is the average transaction fee on the New York Stock Exchange or the NASDAQ. I mean, I'm one of those old people who comes from, look at it this way. I mean, when I wrote about the origins of fintech, I mean, we're still using this papyrus thing that seems to have dropped away over the course of the years as people bought their Kindles. But I mean, in that distant past of using paper in books and talking about the future of finance and fintech, I think we always thought that the new thing was coming forward because it was revolutionary, more efficient and cheaper. Whereas what we definitely see here is like 46 times the amount of fee is just like crazy. And let's face it, not even the great Goldman Sachsers of the world at their ultimate peak of strength have ever managed to charge, well, not managed to charge too many people 46 basis points for anything. So I suppose that's my kind of concern there. But nonetheless, it's an interesting paradigm shift. It's a really fascinating moment. We look forward to Coinbase joining the parish and presumably topping Young's Exchange pyramid come tomorrow. So when it comes to this, actually, we've got a great question to go back to the overall state of the United States of America's government. And we've got Dave Feltus, who's another, rather like you, someone who spent a great deal of his career in the United Kingdom. In fact, he's still in the UK to this day. He's asking, Sandra, how friendly will the Biden administration be towards blockchain with Gary Gensler at the helm of the SEC?
So the short answer is positive. We've actually had long-standing conversations during his campaign and actually now into his administration behind closed doors around a much larger picture, actually, which is the topic of digital infrastructure. They have already come out, Biden's administration's come out with their plan for the multi-trillion-dollar infrastructure initiatives. Well, there's a growing chorus of people from the technology side saying we've got to address digital infrastructure. And another point I just want to raise to everyone, and whether we like it or not, the countries and the governments that write the rules of the road for digital infrastructure is happening. And next generation digital infrastructure will have geopolitical implications. And I think this is where blockchain is a part of that larger discussion, but it's really around who and what are going to get together to write the rules of digital infrastructure.
Fascinating. Who's going to write the rules of digital infrastructure? And indeed, on that sort of topic, I think we actually had a good comment from Colin Howard that was just coming in, because he was noting that China will inevitably react, both in relation to the CBDC issues and also, of course, about the digital identity factors, which I think are going to be very, very interesting. Christopher Messina, back in the trolling wars there, Dave Feltis, a simple guide to Comrade Gensler's view of markets is that no one who was not a Goldman Sachs partner in 1997 should ever make a living in the capital markets. So that's presumably you weren't a Goldman Sachs partner in 1997 then, Chris. That's what you're trying to tell us, which was the issue here. I just don't know. I mean, we will find out, ladies and gentlemen, in about a month's time, because I'm delighted to say Chris Messina is going to be coming back on the show. And in fact, in the meantime, I'm looking forward to recording Messy Times, the Messina podcast, which we're going to be doing next week. Thank you very, very much also to Dan Pritchard telling me that I've had a shameless book plug, and it's still good to see that I've still got it. Well, let me just say in answer to that, have you got your copy of Victory or Death yet, with a foreword by Jeffrey Sprecher, the boss of the Intercontinental Exchange? That's talking about the future of blockchain cryptocurrency in the fintech world, and definitely, I believe, happened to be, well, of course, I've got a vested interest, unmissable reading at the moment if you want to look at what's happening in the world of markets, based around everything, and indeed with a few historical twists all the way back to the origins of double entry bookkeeping. Sandra, we talked about Coinbase, we talked about America, we talked a little bit about CBDC and all of these sort of things. However, I suppose we've got to touch on a lot of people. I'm surprised actually we haven't had more comments so far this evening about it. Look, you're here, you're working with the World Economic Forum, you're doing lots of things in order to manage to make this regulated, organized, and sorted in a better world, in a better organized way, so that therefore we're growing the pie responsibly. But if I may say so, I mean, there is a bit of Wild West behavior still going on here at the moment, isn't there? I mean, I don't know, Faye springs to mind immediately. I mean, it's quite incredible how you're seeing the differentiation between the good stuff, the sort of the white hat side, and maybe the slightly more dubious side of the business.
So I think you're alluding to DeFi here, and also some of these stable coins that are being launched. The FEI protocol, FEI, for those who are not familiar, raised about, what, 2.3 billion in a couple days. Imagine trying to raise that capital in traditional markets. 2.3 billion is pretty amazing in a couple days. So that algorithmic stablecoin has some very interesting properties to it. I agree with you. There is Wild West going on, but there's also massive amounts of innovation going on in the decentralized finance space that ultimately will challenge the paradigms of what people are calling CeFi, which is centralized finance, which is basically the incumbent markets. And I think where we arrive, hopefully over time, is a world where there are bridges across both, because there are some really interesting DeFi enabled solutions, and, with respect to improving your own experience as an individual, to be able to swap out of things very quickly or to settle things very quickly in a transparent way. That's actually really nice for a consumer, But again, we need to be careful about there being guardrails from a regulatory and AML, KYC perspective that just aren't there right now. And I think there will be tensions, and frankly, there are going to probably be some tears. I hear every day about some smart contract that's gone awry because there's a coding error and people lose millions. And we're no longer talking about small money. We're talking about billions and into trillions now. So the regulators do need to step up, not only their engagement of just trying to understand what's going on in the space, especially on the leading edge, but also making sure that they balance that with, let's face it, we need innovation to happen as well. And we don't want the incumbents squelching every piece of innovation that starts to bloom.
Obviously, we don't want to see innovation being squelched at any point in time. Otherwise, you might end up with, well, just as Dan Pritchard was asking, a sad case like the case of the blockchain island of Malta, where I edited the book of the blockchain island shortly before. Unfortunately, I think overregulation managed to mostly kill the endeavors that were going on here. But you make a great point. And also, DORA in the European Union, I was listening to something about that today. These are all attempts to try and make technology work better. But it's going to be somewhat of an uphill struggle, I think, given the nature of somewhat analog nature of boards at this point in the world. And that's why it's so good that you're out there educating people. We've got a great question from Martin Watkins. He's asking, what is the solution to the cross-chaining conundrum that restricts liquidity transitioning between platforms?
I don't know if you are referring, Martin, to specific chains, but the interoperability question, if I've got that right, is really layer 2 solutions, as they call it. And there are lots of layer 2 solutions that are evolving. You've got Cosmos, you've got Polkadot, you've got DAML's got a language that basically allows you, especially as an enterprise, to not worry about what blockchain is sitting underneath, but actually just solve for your business problem. And if you use DAML, it's sort of the interface that will then deal with the messiness of the blockchains below it. I think there are solutions that are coming into play. Does my blockchain talk to your blockchain? The problem is we had everyone build their own blockchain to begin with. So if that's what you're talking about, solutions are coming at the layer 2 level. If you're talking about liquidity and trading, that's a different question. And frankly, there are too many tokens out there.
But on the other hand, there are too many tokens out there. There are 36,000 publicly quoted stocks around the world, and everybody says there aren't enough of them. So shouldn't we be allowing, 100,000 tokens to bloom?
Oh, I'm sure there may be in the future. Right now, what are we at? Like 5,000, 6,000? I don't know what the exact number is, but you're right. I just, as a person and a human, can't keep track of, multiple thousands of tokens.
No, I think you're right. I'm being slightly facetious. Certainly, they need to better define what they're going to do in order to find their niche. And there are so many dead tokens that are running around the place these days. And in fact, whether they're tokens in Iceland that ultimately just didn't get distribution and so on and so forth, it's an interesting issue, although that takes me towards, I think, Woman on It. I've got a great show tomorrow evening with Gunnar Stephenson, and he'll be talking about smiley coins. If anybody's interested, that's at noon Central Time it's at noon US time, New York time. It'll be at 6 p.m. Cool answer. Thank you, Sandra, says Martin Watkins. So you've got at least another happy customer there. At this point in time, I have to say, ladies and gentlemen, I'm not very impressed on the diversity front. It would be lovely to hear from a few more ladies in the audience at this juncture, but these gents, they're asking a lot of fascinating questions altogether about what's going on. Thank you, Jonathan Kahn, for encouraging Dan to buy a copy of one or other of my books. I'll try not to show any more before the end of the show. So, Sandra, look, one of the things I think that's really interesting in terms of what we've been talking about is this whole thing of, central bank digital currency and all these sort of things. But there's obviously two different things going on here. And in a way that impacts a lot of the world of blockchain, what I would call the wholesale world and what I would call the retail world. And you know well enough from being in, say, the City of London. So what is it? 96% or something of all money that goes through real-time gross settlement is actually institutional funds being swapped. The public are only 2-3% of the whole mix.
Right.
How does that impact upon the way that you're looking towards the structure of things like central bank digital currencies in the future?
That's a fantastic point, Patrick. I'm sitting on a World Economic Forum digital currency governance consortia, which has a report coming out in August. And this covers really sort of unpacking wholesale versus retail CBDC frameworks. And of the supposed 80 plus central bank digital currency projects happening around the world, don't hold me to that number, it's what I heard, is the latest count. There are different problems being attacked by different countries. So CBDC, even in itself, is not a singular thing. It's CBDC for wholesale, it's CBDC for retail. You've got Project Bakong in Cambodia, which has gone live, and it specifically looked to solve the problem of the fact that they've got 60+% individuals, citizens, who have no bank account. And they've now implemented their own version of CBDC through an app, and they're using the Hyperledger Soromitsu Iroha blockchain to enable that. And that's gone live. And that's been around for about a year, I think. But the pilot's been going on for several years. But then you've got other countries that are absolutely looking at just the wholesale interaction between banks and the central bank. And they're not really solving for retail level solutions. So again, it depends on the CBDC use case.
Yeah, it's fascinating actually when you look at all of those sorts of possibilities. And also, by the way, I just got to mention the fact that in one of your previous answers, you were name checking digital asset. And actually, we've got a fantastic session we did about a month ago with digital asset and a couple of other guys. So with Eric Soniecki there, who will certainly illuminate you on a great deal of what's going on. And we are glad to see Anthony Kirby joining us this evening from the UK. Good to see you, Sandra, and good to hear you talking about CBDCs. So, Anthony, have you got a question? It's you're in the last 10 minutes, so your window of opportunity is about to run out. We're here with Sandra Ro.
Hello, it's been a long time. Hi.
So we've had a great degree of discussion during the course of what's going on. So CBDC, I mean, hashtag it's complicated would obviously be the very simple way that we could result to what we're discussing about here. I mean, do you see some sort of impact between what China is doing with their CBDC and how that is going to, first of all, promote other CBDCs in the world, for example, perhaps in the United States of America, and also, is China's CBDC going to end up, do you think, being rolled out as part of a kind of a Belt and Road partnership in a sort of a digital infrastructure?
Yeah, I'm glad you brought up Belt and Road. I don't think the US nor people in sort of the Western hemisphere really talk about it enough, especially in the US, actually. I would say that's the biggest criticism is the US doesn't really think about what the implications are of being completely cut off from a major trading set of partners. And they're going to have digital infrastructure. I was in Kazakhstan. I sit on the AIFC FinTech Council, and they have a whole group focusing on because Kazakhstan sits right in the middle between, you know, China and Russia and a number of important countries going out to Europe, how they're going to be implementing blockchain infrastructure, what kind of digital assets will be used, currencies will be used. Renminbi will definitely play a role, and perhaps even a, you know, Kazakh tenge CBDC version. We'll have to see. But I think, you know, there are absolutely work being done to lay in kind of a greenfield opportunity like One Belt, One Road, the latest digital infrastructure. And again, I go back to digital infrastructure. Who's building and who's writing the rules of the road? And then if everyone else piles on, guess what? You have a lot of influence and power, you know, if you're the one who actually built it. It's something to not underestimate. So the US will need to respond. I think there will be a response. I don't know what the timing is, but there's certainly, from a private sector standpoint, private sector pressure to come out with a national strategy.
That's fascinating, actually, the way you talk about essentially what may be the politicization of a Belt and Road kind of digital infrastructure. I don't mean particularly in terms of China or any other country, but to those who build out the right kind of digital infrastructure, there is going to be a huge opportunity, and possibly much more so than necessarily worrying about having the same gauge of railway track to take your goods that go all the way through Kazakhstan to Warsaw or wherever it's going to be. on the Belt and Road Initiative. It's a very, very interesting and astute point, that, I think. So we've got 5-6 minutes left, ladies and gentlemen. If anybody would like to ask a question, this is your opportunity. Thank you, Anthony Kirby. I'm sorry you've got connection issues at your end. I think it's probably that great British problem of the 6 o'clock news, everybody standing up, singing Rule Britannia and mourning the late Duke of Edinburgh, which of course we are all mourning during the course of this week. Not someone who I think would ever have wanted to be on IPO-VID Live, but nonetheless a very pithy individual and a great statesman, someone who has been quite incredible to live with. But we have a question from Anthony as I extemporize. So what he's asking is, do you believe, are the Bank of China pro CBDC, central bank digital currency, or is it the Chinese national regulator? Because as he says, and also he adds the comment, national blockchains make sense.
Well, I will tell you, sometimes it's better to hear from the horse's mouth. So there is a session that will be happening during City UK in June. And I'm sitting on a CBDC related panel with somebody from the PBOC. So that may be the question to pose there.
Interesting. So therefore, if you're around for UK FinTech Week, that could be an opportunity to interact with both the Chinese central bank at the same time, the People's Bank of China, at the same time as Sandra, when she's discussing the whole fascinating context of central bank digital currency. Now, I do believe, we've got an excellent question. Thank goodness, I'm delighted to see it. A lady has joined the midst. It's wonderful to see. Not only is it a lady, it's another former excellent alumni of the interview seat of the IPO-VID live stream, not been discussing distributing blockchain globally, but was discussing her amazing entrepreneurial path from South Africa through the foreign exchange business and beyond. Sharon Constantian, the chairman of the South African Chamber of Commerce in the UK, amongst her many other accolades. She's asking, is central bank digital currency the answer to corruption in countries such as South Africa?
I wish I could say the answer was yes, but the governance of any technology, including CBDC, is going to be determined by those who write the governance rules. And frankly, if a government decides to use it for nefarious or less than, beneficial ways, then it will be designed as such. So CBDC alone is not any kind of panacea. I actually think that we need to look very closely at the design and framework and governance structures of these CBDCs, and also the privacy rights. We talked about this a lot in the earlier part of the segment. People care about their privacy, and they're getting sick and tired of it being used and, frankly, abused, whether it's government or private corporations. So I think we're going to see a real shift in people not tolerating or being less tolerant of that sort of abuse of power. And frankly, framework design, governance design is going to be very important. So yes, if designed well.
Sharon, for that question. Great answer altogether. Anthony Kirby, thank you. Hey, that was a great answer. She's saying thank you. He's saying thank you very much. Now, Chris Pryor-Williard is back. I'm helping to launch a blockchain adaptation of depository receipts. The potential benefits target issuers, brokers, and investors. It's an uphill battle. What lessons have you learned, Sandra, to help us?
Well, having worked at a very large market infrastructure and trying to get projects off the ground, and also the collaborative requirement, aka getting lots of cats together that don't necessarily want to focus and collaborate, those are challenges. My only view would be is start small, solve a real problem that actually moves the dial. If a business doesn't care about that problem, then you're not going to get the traction you need or the attention and focus you need in a world where people are either worrying about costs or trying to drive revenue, or maybe they're worried about both. But it's got to be something really material that people can see can scale to either saving them, tens of millions of dollars or actually a new revenue line. And I think it has to be business first and problem first.
Business first, problem first. We've actually got a problem, which are so many questions. We're going to run slightly over the hour, ladies and gentlemen, but we're going to get them all in. First of all, let me go to Sharon Constantian. She just made a great comment. That was great on CBDC governance. Answer, a great answer. Thank you very much. It's been insightful, says Sharon Constantian. And therefore, to our last question of the evening from the outside world, Colin Howard, once again, our guest from last week. Pop in and check out his interview, ladies and gentlemen. It was a really, really good show. If every individual has their own personal data file, how will blockchain scale in scope and access speed?
So I would point to initiatives like Filecoin, IPFS, for those who may not be familiar. It's decentralizing storage. And as more and more data is thrown up into the world, it's next generation ability to store data in a secure manner. So I think one thing that we need to consider is that it's not about jamming all of our data into blockchains. Because that'll just make everything run slow and probably just make it all terrible. I think when I mentioned before about layer 2 solutions, there's also things called layer 3 solutions, which are basically going up the stack. So you take the data and you are able to secure it. The hash sits on the blockchain, the verification of which sits on the blockchain, but actually the data itself sits elsewhere. And it's the battle actually we're having and discussion we're having around NFTs. Where are NFTs actually sitting? Because the hash might be sitting on the blockchain, the verification of ownership, but where is the actual NFT? And that's something, frankly, it's devil's in the details. And we're going to have to think very thoughtfully about how we secure more and more data in a ever-increasing data-linked world.
Wonderful comment coming in. The final comment I'm going to give to the public to Robert Brown. Good evening, Robert. It's lovely to hear from you this evening. Wonderful presentation. Well done. Thank you very much. So, Sharon, the floor is yours. Sorry, Sandra, not Sharon. Sharon was the question before last. I do apologize. Slip of the tongue there. Sandra, the floor is yours. Right on the 61-minute mark. We've already overrun, but fortunately, we're not too worried. We're not going to hash in the course of the next 60 seconds. Tell us a little bit. Give us some of your vision of the future. What would you like to share with us as a last comment this evening?
As a final comment, first of all, I want to thank Patrick for the opportunity. When we look at the world today and the paradigm shifts that are happening, we're becoming increasingly digital, and we have to think about the digital divide. We have, 2 billion people that don't have access to the internet, that don't have access to basic, information. It becomes a human rights issue as opposed to a luxury. And I think as we're building out the next generation, pipes, digital infrastructure, whatever have you, we need to be very thoughtful about who gets access and how do people get access, and what part is a utility and what part can you actually do for profit. And it's not about not making money. I think there's plenty of opportunities to make money, but there are certain things that should be utility and social good and community good that, frankly, governments and private sector need to work together to engage.
Sandra, you remind me of Titus Salt. Titus Salt was one of the many great, magnificently successful British merchants and factory owners of the 19th century. And you can actually find his town lives on to this day, Saltaire, where he built effectively a model village in which his workers could work because he saw profit as being allied with the social good. And therefore, he believed he should treat his workers well. We've had a great conversation this evening, ladies and gentlemen, with Sandra Ro. Thank you very much, Sandra. It's been magnificent having you on the show. I do believe we'll probably be asking you back in the near future, given the incredible array of people who've been coming to ask you questions. Coming up next week, we have got Dave Weisberger, Bitcoin to infinity and beyond is going to be the topic with him. He's the CEO of CoinRoots. And the week after that, we've got a man who's been very active today, the host of the Messy Times podcast and much, much more besides. Christopher Messina is going to be joining us. Thank you once again, Robert Brown, for your very kind and generous comments. Thank you, Colin Howard, for what he regarded as being a brilliant show. Thank you very much. And thank you everybody who's been watching and adding comments this evening. Colin Howard, as I just mentioned, Chris Pryor-Williard, Christopher Messina, David Feltes, good to see you again, Martin Watkins, Jeffrey Cutler in New York, Igor Telyapnikov, Dan Pritchard, Jonathan Cowan, and Sharon Constantian, and indeed, if I didn't mention already, Martin Watkins. I'm not sure if you were on that list. Perhaps I mentioned you twice, Martin, but hey, you're like New York. You know, you should definitely be named twice. Sandra Ro, it's been a pleasure from the Global Blockchain Business Council to have you on the show for the course of the last hour. Thank you for distributing information. It's certainly a very, very exciting world of opportunity, and we're with you all the way, seeking to grow that pie. My name is Patrick L. Young. Thanks to our guest Sandra Ro this evening. Thanks to our production team, particularly Marianne and Beata in the galley this week, as well as Ola doing the production behind the scenes. This is a wrap. We'll see you next Tuesday, same time, same place, through the ether sphere of the internet. My name is Patrick L. Young, wishing you a great week in life and markets. Catch up and exchange invest soon.
Thank you.